Hey everyone, it's Barracuda, and here's my video on how to avoid the PDT rule, part 1. There's multiple ways to get past the PDT rule, and I'll be going over one of the ways in this particular video. However, in the other parts, I'll be sharing on the other ways to avoid the PDT rule as well, so stay tuned for that, or probably already uploaded by the time you're watching this. I'll be giving you some quick background so that makes a little bit more sense when I explain it. As a heads up, I will have timestamps for the video, so feel free to use it. I spent the time to make life easier for you guys, so I hope it helps. Even though I'm pretty sure you guys all know what the PDT rule is, I'll explain it just in case. PDT stands for Pattern Day Trader, which, to simply put it, is a rule established by the SEC to mark traders as a pattern day trader if they're using a margin account and execute 4 more day trades over the span of 5 business days. The only exception to this is if you have over 25k in asset value for your account. If not, then you'll be unable to make any day trades for 90 days if you are marked as a PDT. If you make a day trade during that restriction time, well, you risk having further restrictions on your account that could even ultimately lead to your account forcibly closing. It's pretty rough. Now, the PDT rule was made to apparently protect small investors, and although I can see its purpose, I honestly think the stock market just wants more and more money in the market as it incentivizes having over 25,000 or more in your trading account. Anyways, note this only applies to margin accounts, leading to our first way of avoiding the PDT rule, which is to have a cash account. As a PSA to all you Robinhooders, unfortunately you can't have a cash account. Everyone else? Well, for the most part, every other broker has the ability to create a cash account. Some brokers I would personally recommend would be WeBull, TD Ameritrade, Thinkorswim, E-Trade, and there's a lot of them out there, but those are some of the ones I know for sure that have the cash account feature available. As a heads up, I have some great videos on WeBull in my channel if you're interested, and have a referral link in the description below where you can get some free stock, and I get some free stock too, so it's a win-win situation. Now, basically a cash account works like a margin account, except there are 3 main differences. There's more than 3, but these are the main ones you probably want to take note. Number 1, you can only trade on settled funds, and to make this short and sweet, if you sell a share, you have to wait 2 trading days before you can use that money again. And if you sell options, you have to wait 1 trading day before you can use that money to trade again. Number 2, margin account lets you borrow money, and without getting too complicated, with cash accounts, you use your money that's available and only your money. You use a margin account depending on your portfolio size. Your borrowing rate, or how much money you can borrow, can fluctuate pretty heavily. And number 3, quite honestly, the obvious one, you're not restricted to the PDT rule. So while there are some cons on having a cash account, I really do think if you don't have over $25,000 to invest in, it's definitely the smarter decision to play less trades and really have some good setups. Yes, you won't be able to trade as much or use as much money to trade, but definitely long term, if you're under that 25,000, I think is a great setup. And I've made some videos on doing just that and have some in store for y'all, so subscribe to be notified when they come out. Happy trading!